Most people ask the question too early. How long will it take me to become profitable? They ask it before understanding what profitability actually means. They ask it before understanding the cost of learning. And they ask it before understanding themselves. Because profitability in trading is not a date on the calendar. It is a phase you grow into. Some people trade for months and make money. Others trade for years and never do. So time alone is not the variable. Process is. In the beginning, most traders enter the market with optimism. Welcome to the phantom trader world, where clarity comes before execution. Trading looks simple from the outside: a chart, a few indicators, a buy button, and a sell button. This phase is driven by excitement, not understanding. You don't yet know what you don't know. Losses at this stage feel confusing. You assume the strategy is wrong, or the market is unfair, or you just need a better setup. This is where most traders start jumping from one approach to another. They believe progress comes from switching, but in reality, progress comes from staying. As time passes, optimism turns into frustration. You realize trading is harder than expected. Risk management matters. Psychology matters. Execution matters. This is often the most dangerous phase, because results are not visible yet, but effort is already being spent. Many traders quit here. Not because they can't learn, but because they underestimate how long learning takes. For those who continue, something important changes. Losses stop feeling random. You begin to understand why they happen. You start managing risk better. Position sizes become smaller. You survive longer. At this stage, you are not profitable yet, but you are no longer reckless. This phase can last months or even years. And this is where patience separates traders. Becoming profitable is rarely about one breakthrough moment. It is about accumulating competence. Screen time builds pattern recognition. Repetition builds discipline. Mistakes become data. Eventually, something shifts. You stop looking for the next strategy. You stop chasing trades. You start refining one approach instead of abandoning it. This is where consistency begins. Not consistency in profits, but consistency in behavior. Rules are followed more often. Losses are accepted without emotional reactions. Winning streaks don't create overconfidence. This is usually when profitability starts to appear. Not as a sudden explosion, but as a slow stabilization. Some months are green, some are flat, some are negative. Losses are smaller and controlled. This is an important distinction. Being profitable does not mean never losing. It means losing in a controlled way. Many traders misunderstand this. They think profitability means constant wins. In reality, it means survivability with an edge. So how long does this take? For most traders, a realistic range is measured in years, not weeks. 2 years is common for disciplined learners. 3 to 4 years is normal for many. Some take longer depending on time commitment, guidance, and mindset. This is not failure. It is skill acquisition. Trading compresses feedback. You feel mistakes immediately, and that makes the journey emotionally intense. Another factor people ignore is market exposure. A trader who has only seen one market condition is not yet complete. Bull markets, bear markets, low volatility, high volatility, each teaches different lessons. Profitability that survives motions is what actually matters. There is also a difference between being profitable and relying on trading as income. Early profitability is fragile. It needs protection, not pressure. When traders try to force income too early, they increase risk, size up too fast, and often destroy progress. Professional traders respect phases: learning phase, stabilization phase, scaling phase. Skipping phases rarely works. So instead of asking how long it takes to become profitable, a better question is this: how long am I willing to stay consistent before demanding results? Because trading does not reward urgency, it rewards persistence. Profitability arrives when your behavior stops fighting probability, and that moment cannot be rushed. Let's slow down and define the word profitable, because most people use it incorrectly. There are at least 3 levels. Level 1, profitable on paper. You take a few trades, you win more than you lose, and you feel like you figured it out. This is often randomness disguised as skill. Level 2, profitable over a sample. You can execute the same approach for 50, 100 trades with controlled risk and stable behavior. This is where an edge begins to show. Level 3, profitable across conditions. You can survive different market environments without losing discipline or breaking your risk model. This is where trading becomes a real skill. Most beginners are asking for the timeline of level 3 while they are still living in level 1. So what actually controls the timeline? First, time commitment. A trader who studies 1 hour per week is not on the same path as someone who studies 1 hour per day. But it is not just hours. It is quality of repetition. Second, feedback loops. If you trade without journaling, you are repeating mistakes without seeing them. If you trade without review, you are collecting experience without extracting lessons. Third, emotional control. Two traders can have the same market time and different timelines because one learns from losses and the other reacts to losses. Now, let's make this practical. If you want to speed up learning in a healthy way, focus on building a routine that produces clean data. A simple routine looks like this. Before the session, define the market condition you are in, trend, range, transition. Define what you will trade and what you will ignore. Define your maximum risk for the day. During the session, take only setups that match your rules. Write the reason for entry before you click. Define the invalidation level before entry. After the session, screenshot the chart. Record whether you followed rules, not whether you won. Identify one mistake and one improvement point. This routine sounds boring. That is the point. Trading becomes profitable when your behavior becomes boring. Now here is a hard truth. Many traders never become profitable because they never reach a large enough sample size. They change strategy every time variance appears. They take 12 trades, lose 7, and conclude the strategy doesn't work. But probability does not show itself in 12 trades. It reveals itself over time. If you don't stay long enough, you are not testing a strategy. You are testing your patience. Another major reason timelines differ is that people confuse learning the market with learning themselves. The market is complex, but the trader is often the bottleneck. If you size too big, you will exit too early. If you need excitement, you will overtrade. If you need certainty, you will hesitate. These are not market problems. They are identity problems. And identity problems take time to rebuild. Now let's use a realistic example. Imagine two traders. Trader A studies 6 months, finds a strategy, takes trades randomly, and evaluates success by profit only. Trader B studies 6 months, chooses one approach, limits risk, journals every trade, and evaluates success by rule following. After 1 year, Trader A may have more trades, but Trader B will have more improvement, because Trader B is building a system that compounds. Trader A is building emotions that compound. So how long does it take? If you are consistent, 2 years is a reasonable minimum for many people to reach stable behavior and a working edge. 3 to 4 years is common to survive multiple market environments and refine execution under pressure. Some people take longer, especially if they can only trade part-time or if they carry heavy emotional expectations. Again, not failure, skill acquisition. Now the best way to reframe the timeline is not how long until I make money, it is how long until I stop self-destructing. Because once self-destruction ends, profits have room to appear. And this is why the best traders are patient. They understand that urgency is not ambition, it is insecurity. The market does not reward insecurity. So the question is not how fast you can become profitable, how long you can remain consistent while being a beginner. Because that is what the market requires from you. Consistency first, profitability later. If you want a clearer map, look for milestones instead of dates. Milestone 1, you can take a loss without changing your next trade. Milestone 2, you can stop trading after reaching your daily loss limit. Milestone 3, you can follow your plan during a winning streak. Milestone 4, you can trade smaller when the market is unclear. Milestone 5, you can review your week and see repeating patterns in your own behavior. These milestones are the true timeline. When you hit them, profitability becomes a possibility. When you ignore them, time passes, but skill does not grow. And remember, profitable trading is not a speed race. It is a stability test. The market will always offer opportunity, but only stable traders can consistently take it. So measure progress by stability, because stability is the only thing that survives time. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.